Hello viewers of my channel. We invite you to watch a video in which we will tell you and show you how to use the indicator Bollinger Bands. We will consider the main parameters, and of course we will make our code script, so if you want to repeat, watch the video to the end. This material is informative in nature and is not a call to action. The Bollinger Bands is often used with the assistance of other indicators to make conceptual and strategic trading decisions. Bollinger Bands consist of 3 bands total: an upper band, middle band, and lower band. These separate bands are each used to highlight extreme prices in a specific security. The upper band is associated with overbought securities, whereas the lower band points to securities that are oversold, and the middle band acts as a moving average. It is common after a lower band has been broken by heavy selling for the price of the stock to revert back above the point of the lower band and move closer to the middle band. The Bollinger Band specifically profits from this type of occurrence, where the demands for a close below the lower band. Therefore, it can be determined that buying the breaks of the lower Bollinger Band is a specific way that traders and analysts are able to take advantage of oversold conditions. Bollinger Bands were created in the 1980s by John Bollinger. This strategy has become one of the most frequently used tools by technical analysts since its inception towards the end of the 20th century. The Bollinger Bands strategy is commonly used to point out oversold market conditions. However, instances may occur when the strategy is correct, yet selling pressure continues. During these instances, it can be hard to determine when the selling pressure will end, and therefore, a protection of sorts is needed for once there has been an acute decision to buy. Stop-loss orders are one of the many strategies that were developed in order to protect traders and analysts from trades that continue to ride the band lower than necessary. There are quite a few limitations to this indicator, but they often depend on the specific case and how the indicator is being used to track market trends. Price is a factor that does not often rebound quickly with the Bollinger Bands. Although the can often correct itself, this doesn't always stop traders and analysts from experiencing significant losses due to rebound delay. Additionally, as mentioned above, it can be hard to determine when selling pressure will end, and so it is essential for the Bollinger Bands to be paired with a protection that will ensure stability when a trader has decided to go ahead with a buy. Bollinger Bands strategy is often used with the assistance of other indicators to make strategic trading decisions based on the status of the market and position of stocks. When there is consistent seller pressure present, and this pressure is not corrected in a timely manner, stocks then continue to make new lows into oversold conditions. In order to use the Bollinger Bands indicator effectively, it is advised that you have a decent exit, such as stop-loss orders. This is to ensure that you and your trade are protected from a stock that continues to ride the lower band, without knowing at what point selling pressure will end. Correction specifies what types of orders the is allowed to create. If the setting value is 0, it can be both long and short. If the setting is -1, it can only short, and if it's 1, it can only go long. Direction enters long when the symbol crosses below the lower band of the Bollinger Bands, and it enters short if the symbol crosses above the upper band. But remember, in the settings you can adjust the direction to be only long, only short, or both. You can use other settings of the Bollinger Bands indicator, adjust them to your trading strategy and specific goals. Of course, you should always check and test any settings in order to get a good result. In addition, Bollinger recommends making a slight adjustment to the standard deviation multiplier. You also need to remember that changing the period of the moving average affects the period used to calculate the standard deviation. Bollinger suggests increasing the standard deviation multiplier to 2.1 if using a 50-period simple moving average, and decreasing it to 1.9 if using a 10-period simple moving average. And so let's talk about the 3 main strategies based on Bollinger Bands, how to use them in trading. The Bollinger Bands indicator is suitable for use in various market conditions and with different market movements, with a growing trend, falling, and in a flat. Here we will consider some of them. Option 1. With an uptrend. We use a moving average to understand how prices move during an uptrend. So, in an uptrend, prices move above their average value, moving average, most of the time. In our case, in an uptrend, most of the time prices will move between the moving average and the upper band. Prices will make higher lows and higher highs, and the market is being influenced by buyers. In this case, the Bollinger Bands indicator can help determine the upward trend in the price position relative to it and the average. Moving between the moving average and the upper band, the trend is growing. Option 2. With a downtrend. We use a moving average to understand how prices move during a downtrend. So, in a downtrend, prices move above and below the moving average most of the time. In our case, in a downtrend, most of the time, prices will move between the moving average and the lower band. Prices will make lower lows and lower highs, and the market will be influenced by sellers moving it down. In this example, Bollinger Bands can help identify a downtrend in price position relative to its lower band and moving average. Prices in the red moving between the moving average and the lower band, the trend is down. Option 3. When moving sideways. First you need to understand how to determine the flat sideways movement. In general, this is any other movement that cannot be defined as an uptrend or downtrend. Sideways movement indicates a balance between buyers and sellers, none of them clearly prevail. There are many options for a sideways trend, but it is enough to remember that this is any other movement, except for an up and down trend. Now let's see what happens to the moving average with a sideways flat. The price will fluctuate around it and constantly cross up and down. We buy on the lower band of the indicator, take profit on the upper one. Or we enter the sale at the top and take profits at the bottom. Each series is calculated by summing the distance between price and a respective Bollinger Band's extremity in the case price is outside this extremity and divided by the sum of the absolute distance between price and a respective extremity. This sum is done over the most recent length bars. Bullish breakouts are represented by the green areas of the indicator, while bearish breakouts are represented by the red areas of the indicator. The oscillator can determine the presence of an uptrend when the bullish area is superior to the bearish area, while a downtrend is indicated by a bearish area being superior to the bullish one. The significance of the breakout is determined by the amplitude of each area, with higher amplitudes indicating more significant breakouts or strong trends. Most professional traders only identify a successful bullish breakout when at least 3 consecutive candles have closed above the upper Bollinger Band. In the example, let's take 4 strong candles closed above the band, which indicates a high probability of a continuation of the bullish trend. The 20 SMA is the ideal stop-loss level to place as soon as you enter a trade. Once the position has become profitable, you can take profits whenever the 20 SMA support level is broken, i.e. the candle closes below the 20 SMA, or when you feel that the volatility has reached a local peak. The concept of band trading is very interesting as it gives a clear expectation of what the upcoming move will be. You can certainly benefit from this. There are many band trading methods, such as Bollinger Bands, but the advantage of the latter is that the bands can expand and contract depending on the price movement, so it can be used in any market conditions. We got acquainted with the popular indicator Bollinger Bands, measuring volatility. It can expand and contract depending on the state of the market. It can be used on any financial markets. Day-akai traders can see how the rotation of the average value, Bollinger's smug shards, are created behind the standard deviation of the average value of the symbol. You can develop any trading strategy for yourself, from simple to advanced. As part of this video, we learned 3 simple strategies. We created them in order to explore the concept and possibilities. Based on this knowledge, you can create a trading strategy yourself. I hope the video tutorial will be useful for you and help you achieve your trading goals, and don't forget to share this video with your friends.